Well, hello traders and welcome back to another video here on the Learn to Trade channel. It's been a while, but we are back in production and we're going to go and have a look at the pound versus the yen, right? The reason we're going to look at the pound versus the yen is because the pound versus the yen has been in a massive up move, right? Since it broke with this choppy range, the pound versus the yen. Let's call that breakout from the top of the move, right? Of this move. So we got buyers. I'm sorry, sellers jumping in here, and then price got stuck inside of a kind of a rising wedge pattern at the top of the structure, right? So we're going to call the breakout zone the 142 level, right? We don't have to be exact because zones of support and resistance are not actually lines on your charts. They are zones on your charts, and we are going to focus on this zone right here. So let's get rid of all of the other lines on my chart, and let's rework that chart together. Let's go to an 8-hour chart because we're looking at the long-term moves on this currency pair, right? So what we have here is that after the breakout of the 142, from top to bottom, from bottom to top, this currency pair has rallied 545 pips, right? That's about I didn't see it quite there, right? 3.75% rally. All right. Now let's have a look if we can find some structure in this move. Because if we can find some structure in this move, then we are definitely, or most definitely, going to look for a possible trade on it, right? For the time being, we have missed both the breakouts on this weekly low and on this one right here. But it's completely fine because there's a ton of possibilities to trade this currency pair still. Now, we're going to have to go a little bit higher, right? A little bit higher. And the reason we have to go a little bit higher is because we need to look at the next key level in our charts, right? The first key level was already broken, which was this highs, and a lot of traders got caught short in this position, even with the flat triangle going here, which we traded on the pound versus the US dollar. And if you want to receive our VIP signals or our swing trading signals, well, I'll leave you a link below this video. It's only 35 pounds per month to receive quality signals and analysis, right? This is just me showing you what I do. Right, so we have this high right here. This dates from December 13, 2019, right here. From this high, this is where just have a look at this chart, right? And this is why key levels are so important. After a big move to the upside, we had here a 17.5% move to the upside, or a 2,100 pip move, right? Bulls were in deep control of this market, and here is where sellers took control of this market, bringing price even lower than the lows that we saw before on August 9th from August 9th through September 3rd, 2019, right? This was an extremely obvious bear trap. Again, but the reason that I'm showing you this is because this is where bulls lost control. Now, fast forward to current price action. We are not quite there yet, right? We haven't quite retested that level, those highs, but remember, it's only 30 pips away from it. The high of this move was only 30 pips away from it. This didn't trigger anything for me because I was looking at the confluence between that level and the rising structure, right? But in any case, the next key level that I'm looking at is the 792 in the pound versus the yen. So now let's go. Why don't we go to the lower time frames so we can see what's really going on. Now these are the previous weekly highs and previous weekly lows. And as you can see, we are making higher highs, and higher lows. This is a bullish structure. Now, this is important because this pair already moved this week about 271 pips. I'm sorry, I'm a little bit dyslexic. So that's 231 pips. So what I'm going to look for here is a short on this currency pair. Why? Because if you look at the actual range of the previous 3 weeks, right? And this is important to notice, right? This week was 263 pips. This week was 200 pips. This week was a little lower, 140 pips. And this week we already rallied 230 pips. So the average weekly move on the pound versus the yen of the past 4 weeks has already passed. And at that point, we got that move to the downside, right? We got that move to the downside. So from high to low, we have move 116 pips. Now let's go to the 30-minute chart, right? Now, if we look at the 30-minute chart, we are moving in what seems to be a nice, flag pattern on this currency pair, right? Having topped the weekly average gains for this pair. Now, if we short right here with a stop loss above that high, and we target the weekly lows, right? That would give us a 1 to 2.7%. I want to 2.7 risk to reward ratio, right? So this is why it's important to look at weekly average moves and to look at the possibilities of a move continuing to the upside if we are in a rally, or reversing at the top of the move based on what you see that currency pair or that particular product that you are analyzing did the last few weeks, right? So this is, when I started the video, I wasn't going to show you this, but I think it's interesting and on how to use the average weekly moves for to trade the currency markets. And remember, this is by no means an indication or a trading signal. This is this is not a full-on strategy, but this is something that you can use in your actual strategy or your current strategy to trade or to have more confirmations on your analysis.